So thank you so much for coming on this webinar in short notice here. I am recording this for future and other folks who may have missed this webinar for this particular deal that I'm actually very, very excited about. So for those who don't know and just logging in, my name is Jan. I'm the founder of Fortune Homes team. So part of the things that we do is do cash syndications for different deals that we personally do with not only ourselves, but also other folks as well that has a lot of merit and a lot of upside to it. So we want to share those opportunities through a capital raise and capital syndication to be able to take on those deals and share the wealth with everybody. So we're going to go through these two different deals here. There's called Graham 1 and Graham 2. So phase 1 and phase 2, okay? So let me go through the slides, and I'm assuming everyone can see my screen. Is that correct? Can everyone see my screen?
Yeah, we can see it.
Okay, perfect. Okay, so real quick, for those who don't know Fayetteville very well, Fayetteville is about an hour away from Raleigh, North Carolina, and it's a very big Army base there called Fort Bragg. So that recently, it was Fort Bragg, it was renamed to Fort Liberty, now it's renamed Fort Bragg again, so right back where we started. So Fort Bragg is a very large Army base there that constantly has growth over there, and there's a huge enlistment of new military folks ever since the new Trump administration started this last month. And this area is growing in a pace that's been similar to the Research Triangle Park about 10, 15 years ago. So the mayor of Fayetteville, who is, and also the city council of Fayetteville, has a really good relationship with a developer that's one of our developers is out there making things happen here. So I'm going to share you guys his background a little later on. But the location of the land we're looking at is about 10 miles from downtown Fayetteville and about 12 miles away from Fort Bragg. Okay, so pretty decent location. All right, so there are two different phases. You got phase 1 here, which is this little trapezoid rectangle on this side here. And then phase 2 is this triangle area. So phase 1 will be done first and phase 2 will be done second. Okay, and as you can see, all around these two pieces of land are already have finished homes that were built in the last 10, 15 years or so. So these vacant lands is just primed to be finished off, so that way the whole area is complete and more suburban versus rural. Okay, so Graham 1 is basically developing 180 lots over 45 acres. So this is a snapshot of what the site looks like and where the stormwater management will be built and everything. So here are the different phases. Okay, so phase 1, we're basically developing 180 lots over 45 acres. The duration is roughly 15 months to create sellable lots. And then our exit strategy is to sell the lots, the finished lots, to a home builder. Okay, so you buy the raw land, you go through what's called entitlements, and the entitlements allows you to subdivide it out to so many lots per the plan that's approved by the city council and the reviewers, the technical review board. And once it's done, then they go ahead and do the physical construction, which allows, which includes, excuse me, stormwater management, building the roads, building the utility infrastructures, and so forth, to where now a builder can come in and buy all the lots individually, 180 total lots, all right, and build them, build a home on them to sell. So Dream Finders is actually a very large builder based out of Jacksonville, Florida, and they have sites that they built all across the Carolinas, North Carolina and South Carolina, and it's already pre-sold. They've already wrote a contract with a deposit of $1.1 million to buy these lots after they have been sold, after they're completed, okay? So to have an end buyer already purchasing this before our team even buys it says a lot already, and the risk tolerance with that, okay? Phase 2 is smaller, developing 114 lots over 21 acres. Same thing, 15-month duration. And this builder is called Smith Douglas, okay? So they're a competitor Dream Finders. And one of the things that our developer wants to do is to create friendly competition and not have a monopoly of any builder in one particular location. Okay, so developer Sam and Scott Shelton of the Shelton Company, their experience is that they were the ones who did the site development for the African American Museum right across from the White House and in front of the monument. So working in DC to be able to do a site development in that high visibility location says a lot, because there's a lot of things required in details to make sure that nothing else happens, because there's a lot of stuff underneath the White House and the monument in DC that we don't, we may not know about, but they make sure they had to protect. Okay, they've also done residence halls at Howard University, Richmond Justice Center, and a bunch of other places as well. But these are just a few of the items that I named just for reference, okay? The site contractor they're using to do site development, which is to move the dirt and build the utilities, is Precision Earth and Pipe, LLC, based out of Raleigh, North Carolina. Now, a little bit about the Fayetteville Marketplace. As mentioned, Fort Bragg is one of the largest military bases, and there's a need for new real estate. All the time. We're projecting that they need at least 20 to 30,000 more homes in the next year or so to be able to accommodate for the growth that they're having, which if the supply is not there, that means the prices of the land will just go up. So of course the supply of the land can only happen as fast as developers can develop them to be able to have homeowners go in there and buy these lots and build them accordingly. Okay. So very good location. In addition to that, about 50 miles away, Disney actually purchased 1,500 acres in Pittsboro, North Carolina, so about 50 miles away, and it's going to be a large housing community. I'm not sure. Oh, I'm sorry. 4,000 homes that they're building. So the fact that Disney sees value in this location already says a lot. So, not only will Fayetteville in this general area be a military base, but then also be a tourist attraction as well down the road. Okay, so here are the project details. Okay, as of February, contracts been ratified by the developer, earnest money has been deposited. This is actually phase two's information. Actually, you know what? Let me go ahead and skip through this one here and give you guys the bullet point of everything, okay? So phase one, the schedule, all right, we're looking to close this week on Friday, and the entitlements and land disturbance permits looking to be completed by the end of May. And then that means it's going to be shovel ready at the beginning of June. So once it's shovel ready, then we complete the erosion and control and clearing, and then the stormwater management, sewer system, water utilities, and then the grade, the asphalt, and the curbs by the end of October. And then the first takedown from the buyer will take place in October as well, where they will purchase 55 lots from us at that time. Okay, and then purchase the rest of it for every 3 months shortly thereafter. So this one's phase two, closing on or around March 24th, so about a month away. Similar schedule, so a few months down to get to the entitlements, and then about 6 months of construction before the buyer starts to buy down on those lots at the end. So you see the buyer begins takedowns in March of 2026. Okay. So here's some documentation I want to show you guys that has already been pre-sold. So Dream Fighters is an example for phase one, based out of Jacksonville. And you see the Jacksonville Jaguars symbol up here. But you see in the little green box here that the first 55 lots will be sold, purchased at $83,000 per lot for a total of $4.5 million. And then $86,000 per lot for the second takedown at $86,000 per lot. And then shortly after that, the remaining 70 lots, which is the biggest chunk of everything, will be purchased at $89,000 per lot. And the reason why they kind of staggered it that way is because as they build the houses, each takedown should be worth more because now there's people living in that community. So you put that there, a total of $15.5 million in proceeds at the end of the day. And at the end of the day also, if interest rates go down in the next 6 months, and the builder is selling homes faster or higher than they expect, then there is an option for them to escalate the cost of the purchase of takedown number 2 and takedown number 3. So instead of $86,000 per lot, it may go up to $89,000 for takedown 2, and instead of $89,000 per lot for takedown 3, it may go to $92,000. Okay, so they're going to study the market, and we're going to study the market accordingly, and we reserve the right to update and modify the cost of the lots sold based on market conditions, okay? So here's a couple of other things here that we want to share. So Graham 1 developed 180 residential lots over 45 acres. The raise for this one is $850,000. Deadline to close. It is short notice. We're looking to have a verbal commitment by tomorrow, sometime close the business. So that way we can put all the documents together the following day and get it to closing later this week. Okay, so as mentioned in the notes, that this is ready for closing and already pre-sold from a home builder. Another one here that we did recently, Batosro Lane. This one was completed just today. Today we went ahead and did closing. It actually just happened about an hour and a half ago. Settlement was completed, and now they're going through the soft cost and entitlement process to get this one done to develop 43 townhomes over 10 acres. And then Grand Phase 2, develop 104 lots over 21 acres. The raise here is $2 million. Deadline to commit is March 17th. So that way we have enough time to close the following week. And also, it's already pre-sold to a home builder. We also have Phase 3 and Phase 4 that's still in the works. And we're going to go through more details of that later on. But these numbers are probably going to decrease over time. This is just the initial numbers of all the costs that we put down here, but these numbers will be updated later on for Phase 3 and also Phase 4. So all numbers here are still approximate, okay? So we have plenty of deals in the future here for land development. All right, so Phase 1, here's the offering, okay? So $850,000 raise. We're going to give a preferred return of 8%, and that's the highest of industry standards. Usually you see 6%, 7%. 8% is generally the highest, and what this means is that the investor will be guaranteed a fixed 8% return regardless of what happens, okay? So whether there's a loss or a gain, that is always going to go to the investor guaranteed. The profit sharing on the upside is being offered here is based on the amount of profit that the developer creates over time with the builder. So if the developer and us are successful in managing the project efficiently and effectively to where the costs are lower, then the profit sharing portion should increase. And of course, if stuff comes up, which generally sometimes it does, then we have a lot of contingency in there for us to be able to absorb those contingencies and things that we do not expect. So that way the returns can be right around 30% here over a period of 15 months, okay? So I want to share you guys a uniqueness about this particular deal later on Phase 1 that I'm really excited about. So stay tuned for that one. Stick with me and I'll tell you a little bit about the uniqueness of Phase 1, okay, in one of our last slides here. Okay, now capital fund structure. So depending on how much are you willing to invest, obviously the person who is willing to invest the full $850,000 will get the maximum returns. And anything less than that will then be segregated waterfall down slowly from the fixed APR from 8% down to 7, down to 6, down to 5. And the profit sharing decreases 5% every increment thereafter. And these are the projected total returns, including the fixed return with the profit sharing based on these scenarios, okay? So you can see where you fall under there. Okay, here's the uniqueness I want to tell you about, okay? So the acquisition price of this land, the 45 acres, is $1.8 million, all right? Soft costs, which includes entitlements, permitting, site costs, surveys, everything with regards to getting to entitlement, it's roughly $1.3 million. All right, and then the construction to do the actual work is $8.8 million. So the total cost of before any financing costs is about $11.9 million. All right, so from the contract, from the letter of intent earlier, we see the sales proceed is roughly $15.5 million. Right, but here's the uniqueness to it in green bold text. The end buyer has already submitted a $1.1 million deposit that can be used towards our acquisition. This means that our $850,000 raise that we're doing for this particular deal puts us at a 47% loan to value, LTV, very low risk position, okay? So worst case scenario, when I work with an attorney, they always tell me the worst case scenario. And guess what the worst case scenario is? The worst case scenario is if somebody dies, all right? God forbid if someone dies and couldn't finish the lots. Well, if someone dies and can't do anything about it, then we would obviously foreclose on it, but then we'll be in position of 47%. So if we decide to sell the lot to another builder or develop it ourselves personally, then the upside will be even higher, okay? Now, of course, I don't wish that on anybody, but I want to share with you guys that rationale on how low of a risk this position is when people invest in this particular deal in Phase 1. You will be in first position, all right, and everything else comes after that, whether it be a construction loan or anything else comes after that. Okay, so very low risk position, but then the returns are also very, very good. Now here's the offering of Phase 2. Phase 2 is a $2 million raise. All right, a little bit less than Phase 1, but 8% still being the preferred here in this scenario here, and with the profit sharing leads you to a 23% annual return for this particular deal. And then capital structure showing here between $100,000 to $1 million is between 15 to 23%. All right. So let me share you guys also meeting the team. Victor Chopra, one of my good buddies from Upper Mara, Maryland. He has great experience in doing a lot of different types of development, including condo conversions, mixed-use buildings, multifamily, land development, You name it, he's done it. Okay, he's done a lot of very advanced Airbnb for politicians in DC with properties in really, really good locations. So, really good gentleman. That's not a very good picture of him, by the way. So I share that with you guys. And then for myself. Okay, myself, I come over. I started real estate investing back in 2011. I have a master's of science in aerospace engineering. Left that government job to do real estate. We started with fix and flip, but ever since then, we've ventured off into doing a lot of other things, including condo conversions, land development, multifamily syndications, and so forth. Okay, so we've done a lot of things, and we also have a training company that teaches people how to fix and flip and wholesale at the same time. Okay. And here are the developers, Scott and Samuel Shelton. So Scott, let me start with him. Scott is born and raised in Northern Virginia, near Ashland, which is near Kings Dominion. And he used to work on a tractor when he was 7 years old with his dad. And from there, he has grown into a very significant individual with over 30 years of experience in doing mortgages. And since he's retired from that a couple of years ago, he's used that knowledge now to really focus on land development and other deals that we've already mentioned in the portfolio that he's done. Okay, Samuel Shelton is actually his son, a very sharp individual. I believe it or not, he's only 23 years old, but he's very sharp, very detailed. I really like him, and he definitely knows what he's talking about and what he's doing there. And he's learned a lot from his family, including his father and his uncles, who does site development over the years. So they come from a very good family of experienced site developers. Okay, so with that, guys, our main focus right now, of course, is raising the $850,000 for phase one. So that way, that can be completed as soon as possible. So what I'm going to do now is I'm going to leave the slide right here. This one for phase one, and I'm going to go ahead and open up for questions that you guys may have about this particular deal in phase one or even phase two as well. Any questions about phase one and how everything works? Any questions at all?
And the closing on the phase one will be 21st.
I'm sorry, can you repeat the question?
The closing for phase one will be on the 21st.
Yes, 21st, this Friday.
Okay, so you need a commitment, like you said, tomorrow, right?
It's like tomorrow, yes. So that way we have that evening and the next day to draft up the documents and prepare wire instructions and so forth.
Okay. And phase two, it's in March.
That's correct. So we have plenty of time for phase two.
Okay. And just curious, do you know what they sell? Because this deal right now, it's a single family homes, right? Development.
Yes, Gram 1 and Gram 2 are single family homes. That's correct.
Do you know how much these will be like a final product?
Oh, the homes? Oh, the homes?
Yes, I'm just curious with the prices there.
Yeah, that's a great question. I don't know what the builder plans to build, like how big, but I do know for this one in the townhouse community, I know they're going to be something like 3-bedroom, 2.5 baths, or 4-bedroom, 2.5 baths, 3-level townhomes, some with a garage and some without a garage, depending on if it's an end unit or not. And the retail value of those townhomes are roughly 300 to 325.
300.
Yes.
Yeah, I just like wondering the cost of construction in North Carolina is
The cost of construction is a little less in North Carolina than it is up here. It is. So I recall if I remember, because I had to split up the vertical construction of the actual townhouse and also the horizontal for site development. But I remember if I combine all the numbers together, the total cost to build each lot, vertical and horizontal, was roughly $210,000.
210 to
Yes.
build.
Yeah.
Okay.
Yes. Yeah. So those are their numbers, and actually that was just the first proposal, and way back when. But there are new proposals out there that's actually a little bit better and more competitive.
So if the
Okay,
210 is the construction cost, 83 is the lot cost, they're selling at 325, where is the delta there?
Oh, well, you mean the acquisition?
Yes, if
So-
they buying the land for 80 plus and then 200 to build, then selling costs like 330.
Oh, remember, these are builders. No, well, I'm sorry. So I take that back. I'm sorry. The ones that I looked at was if we built the vertical. So for us personally, we are not home builders. So our prices will probably be higher than a national home builder who already has all the architectural plans and all the templates and vendors in place. So their cost will probably be a lot cheaper than if we were to do it.
All right.
I'm
So
prob-
you were just researching how would your
Yeah,
company
yeah, it wouldn't make sense for us to do it because it just doesn't make sense because that's not our core business, right? These
Mhm.
home builders who are national and publicly traded, they have a lot of capital behind them, so they don't really need a lot of cost of financing or things like that. But they also do things in volume, which allows them to buy materials and labor much cheaper.
Mhm.
Okay, so Sri, that's a great question. I really appreciate that. I had to clarify that. Thank you.
Yeah, the pref rate that you're offering, when does the payment start, assuming that somebody deploys the cash on,
When
19th or 20th?
Okay, so when did returns come back? Is that right?
Yeah,
Okay, so for this particular deal, so the 8%, generally for land development, we don't pay that all back until the deal has been completed. However, in this unique situation, because there is a takedown schedule, because generally you will sell everything all at once to the builder, right? But in this case, because of the relationship with Scott and also the builder, they've agreed to do a takedown schedule. So in October, the first payment of 50 some odd lots is 4 million and some change will come, and that money can then be used to finance more of the construction down the road, and also pay down some interest and or principal if that time warrants that. So there is a possibility that some interest will be paid down during the first takedown. Let me go back to the schedule here. All right, so the schedule for phase one. All right, here we go. So entitlements May, and then the first takedown in October, right? So um hypothetically, let's say the closing is in February, which it is, right? So let's say the 8 months from now, then when we get the first income coming in from the builder, then that could be used toward pay down some interest or principal or both as well.
Mhm.
Okay. So Irina, so this is different than the townhouse one. So a townhouse one is they're selling it everything at once, and there is no takedowns. There's only one takedown.
Yeah,
And
I understood.
yeah, this one's bigger, so there's 3 different takedowns. All right. So Shri, great question. Thank you. Any other questions?
are there
I
any
have,
tax benefits like depreciation or any of that we can take advantage of?
From a tax perspective, the answer is no. Depreciation only happens when you own the rental income. So this is a capital syndication. You'll get a Schedule K, which means that you'll have shares in the deal, right?
Yeah.
And so those dividends or distributions will come and we tax at the appropriate rate based on how you invest. So some people, when they do these kinds of syndication, they will either use their post-tax money, or they potentially could use a self-directed IRA with pre-tax money, and those returns go straight back to the self-directed IRA account, tax deferred.
Yeah. I mean, I was just asking tax deferred because, most of my investments are in mortgage notes and there is no tax depreciation. So I'm always looking for avenues where I can, I mean, I have all kinds of vehicles, HSA, self-directed IRAs, solo 401k, I max out everything. Still I get hit on tax. So I'm always looking for avenues where I can get some appreciated bonus depreciation. I get most of it in the oil and gas and multifamily
Yes.
investments. So yeah, I haven't invested in land development so far, any other deals. So I wasn't sure if there is an opportunity for tax savings there.
Yeah, that's a great point. Land development doesn't offer the same thing as multifamily because there is no segregated depreciation, where you can't segregate expenses.
Yep.
So
Okay.
the building's not there yet.
Got it.
Okay. And it's not a long-term hold as well. Okay.
Yeah.
Great question. All right. Any other questions?
I have 2 questions. Can you hear me?
Yes, Curtis, go ahead.
Hey, 2 questions. So I did 2 big projects, not in this area, but near Asheville, North Carolina, in the last 2 years,
Okay.
and they were farms. Pretty much they had been tomato farms, so there was no a lot. The earth moving work was pretty minimal. I mean, we had to put in roads and sewer and water, but it wasn't like a lot of grading, a lot of movement of dirt. But it still took, after our permits, it still took over a year to do basically 130 lots on our projects. So I was wondering about your construction schedule. And then
Okay.
two, the second question has to do with your construction budget. Now, I know you mentioned the people that are your developers, but I don't know if they have a lot of land development, each, the building vertical is one, beast, doing land development is another. So having a, strong background in land development, having a good construction schedule, having a good construction budget, plus a good contingency, because there's a lot of contingency needed in land development, because you don't know, once you start digging in the dirt, you don't know what's underneath. There could be, solid rock
Absolutely.
in some places, could be wetlands, all kinds of things. So those are the two
Absolutely.
questions.
Absolutely. So great question. So let me tackle that one first. They complete the feasibility study period array. So all the stuff they've submitted to the TRC committee, no, they have no objections with the city council. And the engineer has done a lot of good work with the test oil. A lot of it's passed array, and they're just waiting on a couple of final things before it gets back to the city for full entitlement. With regards to contingency, the soft cost here of 1.3 million, a big chunk of that, by the way, is contingency. I think about 800 or 900,000. So that contingency is actually in there that will cover a range of things that are unexpected, including holding costs and so forth as well, like the taxes and other things. With regards to the, I'm sorry, your first question was the time frame, right? Okay, the schedule. So yes, Asheville, if I'm not mistaken, that's I've been there. It's more in the mountains, whereas Fayetteville is not, maybe a little bit more not swampy, but a little softer, I should say. There's still clay there and things like that. But from the soil studies they've done already, the estimate that came back of $8.8 million really is detailed in what they needed to do to make that development down to 100 to 180 lots. So, and that's, I consider that to be a little, I don't know. When I looked at the estimate, it looked a little high for me based on what they were doing. But, I say, let's use this as a worst case scenario, get some other proposals as well. But the history for this particular contractor, the site and the Earth and Precision LLC, they've done a lot of other ones and that look really, like they knew what they were doing. So maybe it's money well spent. I'm not sure. But they are going to look at other proposals as well in addition to this one.
Do you have a strong civil engineer? Because that's what I found is really important.
Right, exactly. An engineering group. Yeah, so they're using an engineering group called the Timmons Group. And so far they've done a pretty good job with putting everything together. So I haven't seen any objections at all. But yeah, there is always a risk of something that comes up that was not expected, and there's always room for human error, which is why we had the contingency in there as well, the $800,000, $900,000.
Yeah, I didn't see any amenities. So all the projects. So I built 2 projects and I was involved in acquiring 2 existing ones, but they all had some amenities. I didn't see any amenities in the
Yeah,
plan for these 2 projects.
yeah, I mean, other than maybe a playground or something like that, but there is really no amenities here. Most of these other lots that were built on the other sides here, there are no pools, no clubhouses, not a lot of playgrounds. There are more public parks than anything else that's available, maybe down the road or whatnot. But yeah, you're right, there are no amenities here. Or not a lot, I should say.
Okay, the last thing you kind of touched on is the experience of the development team doing land development. How much experience do they have doing these planned community like this?
Yeah, well, you're, I guess, a product of people you hang around. So the people that are involved, so Scott and Sam in particular, they're doing one right now. So that's their start. But then the other ones, they have a lot of team members. They have a lot of experience in doing this. That kind of backing them up with that experience. So their experience with regards to the other stuff they've done is, obviously, as you say, is a little bit different. But from my perspective, if they're going to be able to do something inside DC, right outside the White House, then this land development should be a cake, pretty cakewalk, right? But that's my perspective from understanding what they've done.
Okay.
Okay.
Not a comment about these projects, but a comment about if they have other land like this. So the 4 projects I did in Asheville was a institutional investment company. So, $500+ billion of investment.
Okay.
I was managing their real estate portfolio. So, but what they were really interested in North Carolina specifically are these tiny home communities. So they would do the land development just like you're suggesting with these projects.
Yep.
But then they would there would be amenities, and they would lease the land to these people who would then put tiny homes on it. And even a couple years ago during that pandemic, we were still able to basically they had 130 home sites that we were able to sell within 10 months. So that's almost 13 a month, so 2 or 3 a week. And they rented for about $850 a month.
Oh,
So
wow.
pretty good
Oh.
return on. We probably invested $6 million, and it was probably when we were finished, it's probably worth $45 million in a
Okay.
3-year process. So I was just thinking if they see other properties like this,
Yeah.
although they want to sell them to these single family home builders, I would also look at having the civil engineer layout if you could build tiny homes there instead.
Yeah, that's not a bad idea. But I do know that like the mayor of Fayetteville, his goal is to get Fayetteville to be the third largest city in North Carolina. Right now is Charlotte, and right now they're number 6. So
Mhm.
part of these things is when they Scott on these deals, he's very excited about him developing these homes. But there's after Graham 1 through 4 is done later on this year, there's another one right off of I-95 that's 500. One's 500 acres, another one's 700 acres. I'm sorry, another's 200 acres for a total of 700 acres. And they want to get some stuff down from Raleigh so people don't have to drive to Raleigh anymore. Simple things like Costco, a movie theater, Cheesecake Factory, some entertainment. So that way Fayetteville can become more lively. So they really want to develop Fayetteville to be the next, I guess, big town center of North Carolina, right? To compete with Charlotte and compete with the Research Triangle Park. So they're very excited about making things happen to reduce the red tape to make things happen. And with that motivation, that's why we've been spending so much time over there.
Okay.
Yep. Okay. Rob, I saw you unmute your mic. Did you have a question as well?
Oh, yes. Yeah, I was late, so probably I missed the early presentation. But anyway, sounds very interesting.
Thank you.
So yeah, I'd like to take a look at like whatever you have done for the research of the market,
Okay.
as well as the project, especially the cash flow.
You say cash flow, I'm sorry?
Yes. Yeah, because like this is like a short term, so I just want to understand how the cash flow will come back to.
Oh, the cash flow. Okay, sure, no problem. So going back to this chart here, basically once because this is a 15-month duration, right? So month 1, all right, you go through acquisition and then they go through to follow the schedule. And once everything's done with the entitlements and the permitting and everything, then they start selling or doing the construction and then selling the lots based on a takedown schedule from the builder. So the first one that the builder is supposed to purchase is 55 lots for $4.5 billion in October, right? And then every 3 months thereafter, they will buy another set of lots until it's all done. So once that's done, then we expect by the 15th month, all the principal will come back to where the principal will then be paid back with the preferred interest, and then until the builder finishes buying all the lots, then the profit sharing can't be fully calculated. So a portion of the profit sharing will probably come later on once they finish buying all the lots afterwards. But we expect the principal to come back on month 15 and the 8% to be paid, the $85,000 here for this investment. And that's paid up, but the profit sharing portion will stay in there until all the lots have been sold by the last takedown.
Okay.
Okay.
Yeah, that sounds good. So
And Rob, I was mentioning also the good thing about that setup, by the way, is that when you get that money back, you can now put that money to work somewhere else, while this one's still accruing profit sharing that hasn't been incurred, that hasn't been paid out yet, right? Yeah.
All right. So then yeah, do you have anything in detail that I can read?
Yes, I can. Well, I can send you the slides presentation, and then if there's any question in particular and more in detail, I can go ahead and send that over to you as well. Just ask me what you're looking for, and I can focus on that because I can send a lot of detail. I don't want to bore anybody, but if you let me know specifically what you're looking for, I can focus on that particular thing right there.
Yeah. I would be interested in the market research.
Market research. Okay, perfect.
Yeah, make sure because everything could change over time. Right now, it's kind of like a dynamic.
Well, one thing though, I can tell you with regards to market research, one of the reasons why for us as land developers, we're kind of insulated from that because the builder already put a contract down with the deposit. So do you think this builder is going to lose $1.1 million and not buy it, right? So it's not like we're selling to a homeowner who's afraid of interest rates. This is a publicly traded builder that's already got the cash in the bank to take down these things without financing, and then the burden's going to be on them to sell the houses in case there's a change in market, right?
Yeah, theoretically there will be a ideal situation, but I just like to take a look to see that I understand just because I'm not familiar with North Carolina, but the project is very, very, very attractive.
Thank you. Yeah, and to help out also, I used to live in Raleigh. So if you guys ever have my cell phone number, the area code is 919. So that's Raleigh. I used to go to North Carolina State University, back 25 years ago, but I never changed my phone number. So I used to go down to Fayetteville a lot, and it was just, a big military town. But recently, just like the Research Triangle Park, they've developed into a big commercial research center because of all the universities and also all the international interests from different parts of the world. China and Europe and so forth, they're all there doing a lot of research and IT and technical stuff and so forth. And Fayetteville is going to be like the next tourist spot probably because of Disney and everything.
Oh, good.
Yeah.
Yes. I'm looking at a project in that area as well, so probably we can talk about that later.
Okay, perfect. That'd be great. We'll talk offline.
Yeah. And also in terms of this syndication, do you require the
Accreditation? Yes, so accreditation is preferred. We also do the crowdfunding also, but we do prefer Reg D to make it faster and more simple to do everything. So there is a questionnaire that you guys will fill out to show that your accreditation and so forth. And then a PPM would then be drafted together to include you guys as the member shares of that particular deal.
Okay. Okay, cool. Yeah. Another question is like, how many development projects have you completed?
Development project for myself personally,
Mhm.
or the developers here?
Yeah, for yourself and also your partners.
Oh, well, I mean, I don't know how to separate which ones are which, but we've done hundreds of transactions across the last 10, 14 years, whatnot. But for specifically larger deals such as mixed use, family multifamily, condo conversions, land development, we've probably done maybe, I'd say 12 to 15 or so. And some of them we were involved passively, some of them were active. So it kind of depends on the timing of everything and how it was brought to us initially.
Oh, okay. Yeah, I mean, land development is specific.
Land development, say about five or six or so in the last since 2017.
Okay. How big are they?
Some were 10 acres, developing so many lots over that 10 acres. There's one in Dumfries not Dumfries, but Dumfries. And then there was one in Stafford that we're looking at. We never did, but Dumfries, that was 10 acres that had over 20 completed lots. And then there was another one that we did with somebody else in Nokesville that is 200 acres, but they were only able to develop 11 lots by right, and now they're going through the board to get more lots for the rest of the acreage.
Okay.
So that was more closer to home. That's in Nokesville.
Okay. All right.
And there were a lot of ones that we came across our desk that we turned down because the numbers didn't work. Some counties, by the way, especially up here in Northern Virginia, when you sell a lot, they have something called proffers. And I think it's like a big scam because, they're already charging real estate taxes for new homeowners, but they want a proffer of X% of the sale of the lots to the builder. And they said that money goes to the fire department, the police department, the schools, and things like that. But a lot of times it's like 15 to 20% of the sale price, and that really kills the deal. So I know there was a deal that we were really excited about in Bealton in Fauquier County that we had to walk away because when we found out what the proffers were, they were like, we're selling the lots for $210,000, but the proffer was $28,000 per lot. And that killed the deal. It didn't, I mean, you still can make a profit, but it wasn't worth it anymore for the time spent.
Yeah, that happened many places just because sometimes they require you to build a school.
Yes, exactly. Well, the good thing about North Carolina is that they don't have any proffers, which makes the numbers more attractive.
Cool.
Yeah.
Okay. All right. Yeah. I appreciate it if you can send me some documents to read, and then I'll go.
Okay, good stuff. Good stuff.
Yeah.
All right. Any other questions from anybody else? No more questions? Okay, guys, what I'm going to do is I'm going to send a follow-up email with a recording of this presentation for your reference, along with the slides for your reference as well. And then anything in particular that you guys will want to see that you to make you feel more comfortable or more excited about this project, just send me a personal email and I'll get that over to you. And remember, phase one, we're looking to get a verbal commitment by tomorrow. And all we're looking for is how much you're looking to invest, and also how you want to structure. So if it's going to be a self-directed IRA, it's going to be a personal name, it's going to be LLC. Just let us know. That way we can draft the appropriate documents for that purpose. Okay, guys? Well, thank you so much. And if there's any questions, feel free to give me a text or give me a call, and we'll go from there.
Well,
All
thank you,
right.
everybody.
Thank you. Have a good night.
Thank you. Bye.